morning. I should have introduced myself earlier. I'm Charlie Matz. I'm the agribusiness agent out of Ord County, and on here as well are Dr. Adam Kantrovich and Stephen Richards with the agribusiness program team. During this presentation and in general, the terms lease and rent can be used interchangeably. In both cases, we are talking about a farm owner or landowner agreeing to grant temporary possession and use of their farm for an agreed upon time and rental amount. So might say rent, sometimes might say lease. We're talking about the same thing. We want to have all contracts in writing. If any question or dispute occurs in the future, you're going to have something written down to refer to instead of relying on memories from conversations that might get confused. Leases tend to be similar in nature, but you want to refrain from using a general template. Every situation is different, and the lease might need to be adjusted to fit the language of state and local laws. Working with an attorney is the best way to customize a lease agreement to your specific situation and to understand any legal implications, and that's an attorney for both sides. For the rest of this presentation and anytime you're working on a lease, communication between all parties involved is going to be crucial in order to understand where everybody is coming from. And for the rest of this, we're going to be talking about aspects to discuss and include in written leases, and all of these will be specific to your situation and will need to be customized based on your needs. The very basic generalities, we're going to want the legal names of the parties involved. That is the tenants that are working the land, and all the owners that are on the deed need to be listed on the lease. A specific description of the land involved also needs to be included. You could identify the land by any land markers. The acreage should be included. The farm and tract number could be a way to identify it, as well as the TMS number from county records. Do y'all know of any other ways that are good to identify the land on a lease?
Were you asking me, Charlie? Sorry.
I was just asking in general, if y'all had seen any other ways to describe on a lease.
Sometimes you've got some really old-fashioned deeds that are fun to look at, but as long as you've got that description and documentation that land is owned and some sort of survey or something to show exactly what acreage there is, you should be fine.
And just for me, I'll double what Steve said. It's just a matter of whatever whatever you have is what you need to have some form of description there, whether that is a land lot number through the county, or even a more formal description that you would find, describing where that land is. The southwest corner of the southeast of the 60 acres, whatever it happens to be. But the formal deed version would be appropriate if there's not any other descriptor available.
And I think something that you just mentioned, Charlie, that was really important too, is that all the owners need to be on that lease agreement, especially in South Carolina where there might be heirs property or some things like that where there's multiple owners.
Another thing that's really important on the lease is the lease time period. The start and end dates of the lease need to be clearly stated, and communication is going to be important when setting those start and end dates. I know I've run into the misconception that the lease is good for 365 days after the check is written, and that's not always the case. And you also need to have the date that you're expecting payment to be made on the lease to make sure that is also clear for both tenant and landowner. Also, you need to consider the goals and the enterprise involved for that land. If the landowner is thinking of selling this land in a year or two, they're going to want a short-term lease that's going to make them a little bit more nimble and free of complications for selling that land. On the tenant side, if they're looking for land for either a cattle operation or an orchard, something that's going to be more long-term, they're going to want a landowner that's also looking for a long-term lease. A tenant needs to know what they're going to need on that land when they're setting those goals and talking to the landowner. All right, we're talking about payments and rate. I think this slide might be a little more relevant to the landowner, but it certainly involves the tenant as well. And you can go to the USDA NAS site to see what rental and lease rates are typically for your state. And I think they started breaking that down to the county level as well, of what the payment rate tends to be. Do y'all know of any other sources you can find those rates? I've always used USDA NAS.
Well, they a lot of times they call cooperative extension for those rates, right? One thing I noticed is that, what are you getting for if it's a land lease, is it irrigated or non-irrigated? That seems to be the big question to ask first. There'll be a difference in price there. And the quality of land as well, so that all feeds into the price. But generally, those baseline rates are what most land probably rents for, so you're correct.
All I was going to say, Steve's already said it, a lot of times the local extension agent has a pretty good idea on what the value of those are. It gets a little bit more complicated if we're talking about rental of ground that may have perennial crops on it. It can get a lot more technical from that aspect. But knowing exactly what's on that land, irrigation, drain tile, any other sort of buildings that may or may not be a part of that lease, all needs to be identified for helping to determine what that value is.
Here are some of the things to consider when determining the rate. You're going to charge the current value of the land, depreciation of any of those buildings that are on the land, your interest rate, insurance, taxes, and maintenance. We're going to talk more in depth about these in a few slides, but the most important thing to take away, and Adam just said it, is knowing the cost of owning the land and knowing what you have in it as a landowner. There are two common lease payment types in agriculture. Cash rent is the most common. The tenant is going to pay the landowner a set amount per acre or a total amount for the acreage involved. And this goes back to when we were talking about your land description and knowing how many acres you have that you were renting and knowing the value per acre so that you're paying the correct amount. I tend to think of this as more of the hands-off management option for the landowners. If you are an out of state landowner, absentee landowner, this might be a great option for you. You're also going to want to know, Adam just put in the chat box, the tillable amount, what amount is actually workable of your land. And open crop land is what they call it in FSA. The landowner is not going to be making any business decisions or helping with any of the expenses involved in farming for this cash rent option, and they're not going to have that direct risk or benefit of the farming operation. On the other side, we've got the crop share option. This can be seen in a variety of different formats, and that comes down to communication and discussion between the landowner and tenant. The landowner is going to share in the crop expenses as well as the crop revenue, and that can be specified in the lease. This is going to be more common in states where there is a requirement of material participation to qualify for special agricultural tax treatment, meaning they're going to want to see that you have some skin in the game and that you are actually actively engaged in the farming operation on the land. And the landowner is going to be more involved in sharing those direct risks and benefits with the agricultural production in this option. And I'd say in South Carolina, it's more likely to be cash rent than crop share. Is that what y'all seen as well?
Yeah, so far, it's other states need that material participation requirement. And there'll be probably plenty of warning if South Carolina goes that route. But so far, cash rent would be most of the lease agreements that we see. But some people also elect to do crop share in order to still qualify as a farmer for the Internal Revenue Service. So it might be a retired farmer or something like that. So there may be other reasons why they would elect to do a crop share versus cash rent.
Yeah, so we all know life happens, and repairs can be a daily need on any farming operation. The landowner and tenant will need to have a discussion revolving around those and who's going to take care of those expenses when they come up. A minor repair, such as a broken fence board, can be taken care of by the tenant. A major repair, such as if you've got a driveway or some kind of roadway that's going through that farm and that needs to be replaced or repaired, that might be a major expense that the landowner is going to take care of. And then we've got our unexpected or our natural disasters. We just had it was over 20 tornadoes in South Carolina a couple months ago. That was quite unexpected, and at least in Horry County, we typically have hurricanes in the summer months. The owner can be covered by their property casualty insurance, and the tenant can be covered by their renter's insurance. And if there are crops on that farm and they're taken out by a natural disaster or damage, the crop insurance can play a role. And sometimes if there's trees down, fences damaged, and debris, both parties need to understand who's going to handle the cost and also do the work to fix them, who's going to actually clean up the property. We'll talk about government payments more in a little bit, but the USDA FSA does have a wildlife hurricane indemnity program known as WHIP that can handle crop loss from a natural disaster, and another program called ECP that can help with fences that got broken or trees that are down and washouts. But it needs to be understood who's going to be in charge of taking care of those repairs and who's going to also get the government payment. And it's never guaranteed that those programs are going to be activated. It's a long process of deciding whether or not the state's going to be offered those program monies. So it's better to just go ahead and have it in your lease and have it be understood who's going to take care of those expenses. Expectations for operations and maintenance also need to be communicated. Specific verbiage can be included on noxious weed control, maintaining soil quality, keeping those ditches clean, reseeding pastures or hay fields, and crop rotation expectations. If you're in a long-term lease and there's a crop rotation that has a fallow year in there, that's something you might want to communicate with the landowner so they don't think you're just forgotten about the land for a year. Have run into some comments on that, and I know when I was in Virginia, several of the landowners expected that weeds would be taken care of and a soil sample would be done every year to keep up with the soil fertilization and keep that land in production for long term. Capital improvements can be made by a tenant, and in those cases, a long-term lease is going to be necessary. In that lease, you're also going to want to include provisions on the cost improvements being reimbursed if the lease is terminated early. So I borrowed this graph from Top Producer on the tax lives for various farm assessments. And Adam, y'all will know more. I don't know how often this changes, if those are typical from year to year.
Well, typically they remain the same. However, what gets tricky is occasionally there's new legislation which has been happening on a recent basis with regards to tax rules. And so right now, I mean, that is where we're at. And so you just have to kind of pay attention and watch, you know, moving forward, but typically it does not change. And that is also using a particular depreciation method. And again, if you might be a producer of a perennial crop such as peaches, where or Christmas trees or something along those lines, and given the particular situation, you may not actually be able to use those depreciation methods for those years, but it's a good general rule of thumb.
And I think what you're really trying to do is be fair to both parties. So if the lease is terminated, the tenant gets some of that investment back if they made that capital investment. So you may agree on a different schedule, kind of like what Adam just said, instead of the tax. But the tax at least is a good starting point to work from, and then make it more fair from there.
Good point. So in that example, if you've got a well that's drilled and you're going off of this tax life and it's good for 15 years and you write your lease for 15 years, something happens in year 10 and the lease is terminated, the landowner could reimburse that tenant for the 5 years left in that well that's still going to remain on the property. There's several people factors when you're working with land and you're renting or leasing it out. You might want to have a right of entry specific statement giving the landowner legal rights to enter the property. That may need to happen if they're going to access the land in an emergency or to perform repairs. Landowners are also going to want to include a no partnership form statement, and that simply means that neither party will obligate the other party for liabilities or damages outside of what's outlined in the lease agreement. Keeps you from getting any complications with the business that's on the land. And if you're leasing the land for hunting rights, you need to have that communicated as well. Adam mentioned the tillable land in the lease. If you also have some wooded land on that property that you're going to be leasing out, you might want to specify if you're going to allow hunting or not. I know I have family members who hunt on farmland and they typically carry their lease with them so they can prove that they're allowed to be on the property and when they're allowed to be on there to hunt. And it just helps to keep that communication open. And whether or not, yep.
Charlie, the same would go for that. I might be renting this property out for it to be farmed, and yet myself and my family are going to be the only hunters as the landowners allowed on it, and not the farmer itself. And so all those things and details really do need to be put into the lease.
Good point. You're also going to want to include a subleasing statement in there, whether you're allowing it to be subleased or not. Subleasing means if you have it leased to farmer A, can they turn around and lease it again to farmer B? And that's also going to be important when you're updating your information with FSA to know who's allowed to be on that farm and who's allowed to certify crops on there. Which gets us into government payments. Some government payments can be made to the participants who grow the crops, and others are going to be made to the owners on the land who commit to certain practices. So for example, the Market Facilitation Program, or MFP, those payments went to the farmer, who were growing the crops and had that risk in the market. On the other side, you could have the Conservation Reserve Program, where those payments are typically going to the landowner. You can have it split between the landowner and the tenant, but those are going to need to be specified in the lease of who's getting those payments. There should also be an understanding of which party will participate in the programs on the NRCS or FSA side, and who's going to handle the paperwork in the office. If you want your tenant to have the ability to sign up for programs and sign for you, there is a power of attorney form in those offices to allow them to do that. And program requirements and standards change with each program, so it's important to communicate with the people in those offices and understand what you need to do. for each program. Real estate taxes and other costs, it needs to be clear who's going to pay these. Generally, the landowner is going to pay real estate taxes, but if the tenant is going to pay those on behalf of them, that needs to be treated as a rent payment for accounting and for tax purposes. And insurance, usually casualty for buildings will be carried by the landowner. The renter will have renter's insurance, and both parties will carry liability insurance. Do y'all have anything to add on those real estate taxes or other costs?
From an IRS standpoint, and this is something that is usually forgotten about, but technically, especially if the rent is going to be above the $600 limits, that a 1099 needs to be provided between the parties.
And working with a local accountant will help get all of those straight and the specifications for your taxes. At some point, you're going to have to talk about continuing or not continuing the lease and how that will look. You can have a statement in there about whether or not the lease can be mutually terminated before that written end date. Both parties decide they don't want to continue. There's a little bit of estate planning, which people usually don't like to talk about when it comes to owning land and leasing it out. You can talk about, have a statement in there of if the lease is binding to the heirs of the property or to future property owners in the event of a sale. You can also talk about whether or not, if the land is sold, if that tenant is going to have first right of refusal. Will they be given the opportunity to purchase that land before it goes on the market? Some final thoughts. You can include a hold harmless clause, and what that means is that the landowner isn't responsible or liable for the business activities on the rented property, especially if they're in that cash rent payment. Signatures are so important. The agreement's going to become a contract when it is signed. All co-owners of the property, including husband and wife, should sign the lease agreement. In Horry County, we have plenty of heir properties or 5-6 people owning a piece of property, and they should all sign the lease and agree to what is being done on that property. And then on the other side, all co-owners of the business leasing the property should also sign the agreement. If they're going to be working that land or on the property, they should sign the lease as well. And then agricultural property tax rates. The landowner may be looking for a break on their property taxes by leasing their land. If it's larger than 10 acres for agricultural land or 5 acres for timber, they can qualify for a special agricultural use tax rate on their property. And for the tenant, that's good because usually the rental rate can be kept low if they're getting that tax break. If you have specific questions about your locality, you can talk to the tax assessor's office. I know in Horry County, they will call the Farm Service Agency office to see if you have a farm number for that property. And you generally have to put the farm number on your application. So they will check into that. Every state, every county can handle things differently. So just check in with your local tax assessor's office. And then update your farm information with FSA. Usually a good idea to take a copy of the lease into the FSA office. That way they're going to know who's going to be signing up for programs, who has permission to receive government payments on that land. And if you're a landowner and your tenants are changing annually, which sometimes does happen, that gives you the opportunity to update your farm information and update any forms in those offices. Do y'all have anything else to add?
I think you covered it pretty well there, Charlie.
I would agree.
So I've got this QR code For iPhone users, they can just open up their camera. From what I understand, it'll scan it. From an Android, you have to use the Google Lens app. And I've got my email on there to send people any resources. And I'm going to stop recording.